Welcome back to the Global Business Report here on Arise News. We head now to South Africa. The GDP figures, gross domestic product, of course, released from Stats SA yesterday. This is on a quarterly measure, so looking at the last 3 months of 2024. So 0.6%. The forecast from a number of economists that were polled, I think by Reuters, 0.8. In Q3, there was a contraction of 0.1. So you can see that there on the chart. As far as annual growth is concerned, it did come in at 0.6%, but lower than what we saw in 2023 at 0.7. In fact, lowest growth, or rather the slowest pace of growth for South Africa since the pandemic. Let's dive in with Yvonne Mhango, who of course is Africa Economist over at Bloomberg, joining us from Johannesburg. Good afternoon to you, Yvonne. Thank you so much for joining us. And Happy New Year, if it's not too late to say that, in February. So speaking with quarterly growth, the 0.6% figure in the last 3 months of the year. Can you speak to what contributed to the rebound from Q3?
Yes, so we saw growth improve to 0.6% in the fourth quarter. That's following a small contraction of 0.1% in the third quarter. The main reason for that improvement was a rebound in the agriculture sector. Agriculture declined by around 20% quarter-on-quarter in the third quarter, and we saw it turn around in the fourth quarter by around 17%. The other sectors that contributed to growth were finance, as well as the trade sector. So on the trade side in particular, you're seeing that pickup in retail sales, demonstrating recovery in demand.
All right, thank you for that. So you've mentioned agriculture, you've mentioned trade, finance as well. I do want to ask you about mining and manufacturing. They were negative in the negative region in Q4. Any idea what's holding back mining and manufacturing?
Yes, the industrial sector did underperform, did weaker than we'd anticipated, given that we have more reliable power supply in South Africa. Part of the reason for that underperformance is that we still have bottlenecks in the logistics sector. Also, operational costs are high. You may be aware that ArcelorMittal, which produces steel in South Africa, may be closing down because of those very reasons. So despite the return of more reliable power supply, there's still some constraints that are hindering activity in the industrial sector, hence that underperformance in manufacturing and mining.
Thank you so much for that. So I guess looking at annual growth now, the 0.6% figure for full year 2024, slowest pace since the pandemic. Any similarities between, triggers for Q4 with respect to why we had that slowdown in 2024 as a full year?
Yeah, so that also took us by surprise. We'd expected growth to pick up in 2024 compared to the previous year. I think part of the reason for that is we underestimated the impact of the El Nino weather pattern on South Africa. So that's a weather pattern that was experienced between mid-2023 to mid-2024, which is essentially a drought. The worst affected countries were countries like Zambia and Zimbabwe. South Africa was also affected, but the third quarter numbers demonstrated to us that it was the impact was more pronounced than we'd initially anticipated. So that's one of the reasons there was a slowdown, is agriculture was hit harder from the drought than we expected. I think the second point to make is probably the elections. As you can imagine, investors took a wait and see approach. So there was quite a bit of weakness from gross fixed capital formation, and also the recovery that we anticipated in the household consumption took a lot longer to come through.
Thanks for that. I want to get to inflation now. We've got a chart showing the trajectory from February of 2024 through to January of this year. I mean, it was decelerating through much of last year. I think from 5.6 to about 2.9 in November. But we've seen a pickup in December. I think 3% in December, 3.2 in January. What's behind that? Why the pickup in inflation? What's contributing?
So that pickup is more base effect related. I think fuel prices contributed to that, but we're not overly concerned. We expect inflation to remain at the lower bound of the central bank's target, which is 3 to 6%, and we expect that to be the case for the first half of the year. We are projecting a pickup in the second half of the year to the midpoint of the target, which is 4.5%. That's midpoint. We expect inflation to get there by the end of the year. But otherwise, the inflation outlook does remain benign.
Okay, so in that case, I mean, we've seen 3 consecutive, rate cuts from the South Africa Reserve Bank. Mr. Mhango has talked about, inflation, forecasts and so on. So if it's benign, then, does that mean the trajectory doesn't change? We hold going forward, or could there be further cuts? How do you see the monetary policy path moving forward?
So we actually think the cut we had in January is probably the last one for now. We do see the South African Reserve Bank pausing, mainly due to the rise of global uncertainty. As you can imagine, in this world now of trade wars, tariffs going up everywhere, we expect that to have implications on prices going forward. And the central bank governor does tend to be cautious. He tends to err on the side of caution. And we have an MPC meeting end of this month. Our view is that he holds, and to this greater certainty on the inflation trajectory.
All right. Also want to ask you about unemployment. I think we did see it trend down a bit in the fourth quarter of 2024 to 31.9% from 32.1. That's overall. Youth unemployment, though, it's almost at almost 60. So is the government making any significant moves to reduce unemployment? Is this the biggest headache for the government? I mean, how do you think this can be tackled?
Yes, I'd say it is probably their biggest headache. So the good news is that inflation has moderated over the past 2 quarters, so the third quarter and fourth quarter of 2024. However, as you've rightly said, it's still incredibly high. A third of the working age population doesn't have a job, and it's much higher for that young group of people that you mentioned in the 15 to 24 age group. In terms of policies going forward, we do have a budget actually that's being read next week. So many are looking to see what will be revealed there. I think what the government is attempting to do is to create a conducive environment for investment, and as a result of that investment, for the private sector to create jobs. So the ongoing reforms we're seeing in the power sector, in the rail sector, in the telecommunication sector is all to try and create a conducive environment for job creating investment.
Fantastic. I'm glad you mentioned the budget presentation, and you actually preempted my next question. So, Finance Minister Enoch Godongwana is going to, I think March the 12th is when that is going to take place. Can you speak to the rejection of the last budget because of the plans to hike VAT, and then I guess what we can expect going forward, if that will be amended?
Yes, so you are correct. So initially, the budget was meant to be read on the 19th of February. As you know, we now have a government of national unity because the biggest party, the African National Congress, lost the majority at last year's elections. And this coalition government is made up of 10 parties. So when the other parties within the coalition heard that the finance minister, who's from the ANC, was going to propose a 2 percentage point hike in VAT, they rejected that. So the government or Treasury had to go back to the drawing board. The anticipation in terms of options for the budget next week, there's still a view that they may hike it, but a lot more modestly than previously anticipated, so maybe less than a percentage point. There are discussions about increasing the fuel levy. There are even discussions about the employer contribution to the government pension fund being suspended. So those are the areas that they're looking at to try and raise that revenue they need in order to narrow the deficit and stabilize debt.
Thank you so much. Yvonne, my final question, we've talked about so much. We've gone from, GDP to inflation to unemployment to the budget, fiscal, monetary. Putting this all together, what's your outlook for the South African economy as we proceed through 2025?
Okay, so while growth in 2024 did disappoint, we are expecting it to pick up. One of the bright lights is consumption. We're seeing household consumption pick up from a slump a year ago, and that momentum we expect to be sustained this year. We do expect investment activity to also pick up on the back of that improvement in demand, and the ongoing reforms begin to bear fruit. So our projection is for growth to be around the 1.8% level for 2025, taking us close to the long-term average of 2%, which I think is something the country can achieve over the next couple of years. Inflation, as I mentioned, we expect that to remain benign. For now, interest rates to be flat.
Fantastic. Okay, Yvonne, sorry, I'll just drag one more question out of you. You already mentioned the tariffs.
Sure.
Just looking at what's happening around the globe, is that likely to be a headwind for South Africa?
Well, as you're probably aware, there are already issues between the USA and South Africa. One of the things that's in question right now is the existing trade agreement that we have with the United States. That's under AGOA, the African Growth Opportunity Act. And there are concerns that may not be renewed later this year, which would have particular implications on the vehicle manufacturing sector, as well as the agriculture sector, which exports wine and citrus and juices to the United States.
Very interesting times ahead. We always are grateful to you for taking the time to share with us your wisdom on all these topics. Yvonne Mhango, Africa Economist at Bloomberg, thank you so much for joining us from Johannesburg.